Hello and welcome to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Hi to anyone who's tuning in on Facebook Live, and hello to my podcast listeners, which you can find wherever you download podcasts from, but typically on iTunes or Stitcher, or you can find the link on the moneytipsdaily.com website. Okay, now today is a day following Donald Trump's 6 tweets which wiped $500 billion off US stock markets in one day. And this is Friday, that's yesterday Friday, and it's incredible how a tweet can make so much difference to the whole markets, because this is investors' money. When you say it wipes money off the stock market, some people say, who cares? Well, it's just prices of stocks. But these are savers. This is savers' money at stake here. And if you're not directly invested in the stock market, it's your pension money, or it's your money in unit trusts, mutual funds, insurance funds, and so on. And if it's not your money, you haven't got a pension, you haven't got any savings, what about the company you work for, or the company that, if you're working for a small company, you might be supplying to a larger company that is listed on the stock market. And if their share price dives, it can affect things. I won't go into the ins and outs of it now, but it all has a knock-on effect if markets are going down. Now, the stock market lost over 300 billion in 15 minutes due to 6 tweets, and ended the day 500 billion down on Friday. And the Dow Jones closed 623 points down, and this is following these tweets. And one of them said that the chairman of the Federal Reserve was the enemy, and the others talked about new tariffs on China that he's imposing on China after this sort of continuing trade war. This trade war is becoming like a poker game. And it's Forbes then reported that in the course of 2 minutes on Friday, President Trump unleashed 6 tweets about the Fed Chairman Powell speech and the central bank's Jackson Hole annual economics policy symposium, and China announcing that it would impose 5 to 10 pence tariffs on 75 billion of US exports to China. Then the stock market reacted immediately and intensely negatively to Trump's first set of tweets, sending the Dow Jones Industrial Index, that's the Dow Jones is the biggest companies in America, the 30 biggest, down by 400 points in 15 minutes and 500 points within an hour. Now, while the Dow and other index were essentially falling, and then following the Fed's chairman's tweet, in 120 seconds of tweets, it raised a further 300 billion in those 15 minutes, and the markets then fell further. Trump followed up with 4 more tweets later in the day, one of which was joking about the Dow Jones dropping 573 points at investors. At this point, now this 500 points doesn't sound like a lot of money. Hi, Connor, and hi, anybody from Ireland over there. Now, it doesn't sound like a lot of money. 500 points, the Dow Jones is worth 26,000 points, and it's only a couple of percent. But by this time, investors had lost almost $500 billion. Right, and that's a lot of money, and as I said, that's in pension funds and all sorts of things. So if you think about it, 6 tweets, 500 billion, that's around 83 billion a tweet. I wonder if that's a record. I wonder if that goes down as the most expensive tweets in history. Well, it certainly seems like it. Now, this trade war that's been going on for a few weeks, few months with China is like a high stake poker game in Vegas. Like these movies where they have all this chips and he puts a bet and one's bluffing, and they both don't know whether either one is bluffing, and then they keep increasing the bet, and they say, hi Christine and Chinky Tan over there, hi everybody, and you've got these bets going on, and you don't know who's going to blink first, you don't know who's going to fold, right? And they keep saying, I'll see you, and then, right, I'll see you and I'll raise you. So China last week raised the stakes, on some tariffs on 75 billion. So Trump's now said, I'll see you on that, and I'm raising it by 300 billion, and he's gone in further because he's convinced he can win this one. The world is not so convinced, and that's why the markets have been reacting so badly, because it doesn't really benefit anybody to have these trade wars. Because if the two biggest economies get into problems by paying all these tariffs and a reduction in trade, then that will have a knock-on effect for everyone around the world. The old saying, if America sneezes, the rest of the world catches a cold, right? And if China and America sneeze and have a cold, then we might get flu. I don't know. I'm just trying to continue the analogy, but it's true. If you think about it, with these two economies, trade from both countries is already down by billions. They've America's lost billions in exports, and China has lost billions in export, and this is causing China's economy to drop and America's economy. That means they can buy less from other countries like Germany, like Britain. So it will have an effect. So what's going to happen on Monday when the market's open? Because you have these black Mondays where the market just crashes. Often that follows something that happened on a Friday, and then the world has had time to think about it over the weekend, and when the market's open, it all crashes. Now, Asian markets will open first on Monday, but over here in the UK, Monday the 26th is a public holiday, so London won't be open. So I don't know what's going to happen. Maybe Tuesday, if things sort themselves out by Monday, maybe London won't react so badly. But we've seen this before, where you have a weekend of problems, and then Monday comes and you have this, they call it Black Monday, and these things can happen, and it could be one of those bloodbaths. Now, although the markets had settled last week after earlier falls and talks of trade wars, we thought things had settled down. They seem to be settling their differences. I and Money Tips predicted that I don't think this will be the end of the turbulence, and I think we are due for a steep correction or a crash and following a recession. Now, a lot of people disagree with that. They say there's no chance of a recession. The governments of both America and UK have said there's no recession on the way. Prominent journalists like Andrew Neil has said there's no such thing as a recession unless you've had a boom. So you can't have a bust without a boom. But I think there has been a bit of a boom over the last 10 years. Now, my word of the day is called a correction. Because some people talk about corrections, some people talk about crashes. So what is a correction? Well, according to Investopedia, in the world of investments, a correction is generally defined as a decline of 10% or greater in the prices of a security or a share or a stock at its most recent peak. So it drops more than 10%, it's a correction. Now, they can happen any time to include individual stocks or whole indices like the Dow Jones or Wall Street or the London FT 100 index, and it can have a knock-on effect. It can be commodities, currency markets, anything could be a correction of 10%. Correction, decline of 10% in the financial market, and they can last a few days, for a few months, for even longer. And they're damaging in the short term, but generally they're not a long-term problem. Now, stock market crash is different. It's a sudden dramatic decline in the price of a security and assets or financial market, and these crashes can be quite significant. Now, they can happen all of a sudden in one day. They can happen over a few months, but crashes are triggered by a panic event like this trade war, and it can be illogical things like just something happening, something triggers it, a war, a trade war, oil prices going up, or just a sudden panic, and then everything sort of collapses and the market loses confidence and everyone is selling and there's no buyers and the market just collapses, or computers start to sell things like as happened in 2008. Now, significant crash dates have been 1929, 1987, that was a Black Monday, and of course the 2008 financial crash. But smaller crashes have happened in between those dates, and generally we have a big stock market correction about every 10 years. And generally recessions happen around every 10 years. Why? I don't know. It's just a cycle. Things go up for a few years and then they go down. Or they're corrected because they've gone up too far. There's been too much overheating in the economy. So let's see what happens on Monday, and obviously we'll keep in touch and keep you informed of what's going on. But until then, I hope you have a great weekend. If you'd like to know more about how to invest in the stock market, drop me a line on Facebook. It's a good thing to know how to invest rather than leaving your money to fund managers and mutual fund managers and pension fund managers. It's better to know yourself how to invest. And in fact, I did a report last week that most of the UK fund managers were telling people, don't worry, relax, sit back, don't change anything, don't pull your money out, because even if the market goes down, it will go up again. So, no need to pull your money out and rescue your money. Just relax, don't panic, because they don't want you to pull your money out of their funds, which actually has been happening. So the best thing is to learn about it yourself. Okay. Now, final thing, check out my book, Yes, Money Can Buy You Happiness. I talk about making money and being happy with your money and having the right money mindset. You can find it on Amazon, and it's full of good stuff. It took me years to put this together, so it's my life's work. So please support me in that. And thanks for listening. Thanks for everyone who tuned in on Facebook Live. Good luck to you all. Thanks very much. Have a great weekend.